Lithium Americas stock has just delivered one of the most eye-catching moves on the board, closing out Wednesday's trade with an explosive surge that caught the attention of retail and institutional investors alike. After languishing in the mid-$3 range for weeks, the stock rocketed intraday to above $6, finishing the session near the highs with volume that dwarfed anything we've seen in recent memory. The reason for the move is as fascinating as the move itself. Reports surfaced from multiple mainstream outlets that the U.S. government, under the Trump administration, is actively considering taking up to a 10% equity stake in Lithium Americas. For a pre-revenue miner with one of the most strategically important projects in the domestic critical mineral space, the headline was enough to completely reprice investor expectations. At its core, the story is about Thacker Pass, the company's flagship lithium project in Nevada. Thacker Pass is not just another mine. It is projected to become one of the largest lithium sources in the Western Hemisphere, with a targeted first phase of around 40,000 tons per year of battery-grade lithium carbonate. It already sits at the center of U.S. supply chain ambitions, having secured a $2.26 billion Department of Energy loan under the ATVM program. That loan, while a huge milestone, was seen by some investors as a double-edged sword, adding leverage and obligations at a time when project execution risks remain high. But the possibility of the government going beyond the loan and taking a direct equity position reframes the entire conversation. Instead of being just another junior miner struggling to bring a project into production, Lithium Americas suddenly looks like a company that could have the full backing of Washington. For the stock market, the implications are immediate. First, government equity participation would be seen as a massive de-risking event. By aligning its own capital with the project, the U.S. would essentially be signaling that Thacker Pass is too important to fail. That reduces funding risk, increases confidence that milestones will be met, and could unlock better terms from private lenders or partners. Second, it shifts sentiment. Many traders and long-term investors had been skeptical of LAC because of execution delays, cost escalations, and the general malaise in lithium prices over the past year. With government equity potentially in play, the narrative shifts from "will they make it?" to "how big will this become?" That is why we saw the outsized price reaction. A stock doesn't double intraday on a rumor unless the rumor cuts to the heart of perceived risk. Momentum traders piled in, shorts were forced to cover, and algorithms amplified the move. It's the kind of breakout that can reset technical levels for weeks or months ahead. Whereas $4 had been support turned resistance for months, we are now looking at $6 as a new battleground. Investors are already speculating whether the stock could retest double digits if the news flow stays positive. Still, it's important to balance the optimism with some realism. As of right now, there is no binding agreement. No term sheet has been disclosed, no SEC filing has been made, and neither the company nor the government has issued a formal statement confirming the stake. Multiple reputable outlets reported the talks, and the convergence of those reports gives them weight, but investors must recognize the risk that negotiations stall or that the government chooses not to proceed. We've seen situations before where early headlines triggered huge stock moves only to be walked back later, causing painful reversals. The prudent approach is to see this for what it is today, a potential catalyst, not a completed one. Beyond the government stake, the company still has work to do. The Thacker Pass project remains under development, with final investment decisions, first notice to proceed milestones, and environmental and operational challenges ahead. Even if Washington comes on board, the execution risk doesn't vanish. Constructing a project of this scale on U.S. soil, with all of the permitting, environmental, and community considerations, is no small task. Moreover, lithium is still a commodity, and prices have been volatile, falling sharply from their peaks in 2022. A government stake doesn't insulate the company from the fundamental reality that lithium pricing will influence project economics. That said, this is where the optimism is justified. For investors focused on the long-term supply chain story, Wednesday's news is transformative. It aligns perfectly with broader U.S. policy moves to secure domestic supply of critical minerals. We have already seen huge investments in semiconductors, rare earths, and battery manufacturing. Lithium is the next logical step. If Washington is willing to commit actual equity dollars to a project like Thacker Pass, it signals a recognition that government support must go beyond loans and grants. It suggests an industrial policy where critical resources are not left entirely to market forces but are strategically underwritten. For LAC, that's as bullish a tailwind as it gets. For traders watching the tape, the technical action confirms the change in sentiment. Volume on Wednesday's move was nearly 300 million shares, an order of magnitude higher than typical sessions. That is the kind of volume that resets the shareholder base, transferring shares from weak hands to stronger ones, and it establishes new levels for support. It also means the stock will be on the radar of momentum screens, options traders, and algorithmic strategies. Once a stock makes that kind of move, it enters the conversation across Wall Street, which can sustain liquidity and volatility in the sessions ahead. For long-term investors, the risk-reward calculus has shifted. Before Wednesday, the bear case was that LAC might struggle to finance the full build-out of Thacker Pass, that lithium prices might stay depressed, and that execution risk could drag shares lower. After Wednesday, the possibility of government equity dramatically reduces financing concerns. Even if lithium prices remain soft, the implied government backing raises the floor for what kind of support the project might get. That doesn't eliminate risk, but it does create a stronger foundation for optimism. It is also worth considering the role of General Motors, which already holds around a 38% interest in Thacker Pass Phase 1 and has rights to the initial offtake. If the US government steps in as an equity partner alongside GM, LAC suddenly has two of the most powerful backers possible, a major automaker with vested interest in supply and the federal government itself. That combination would send a strong message to the market, to potential off-takers, and to competitors. It would also likely create leverage in negotiations with other partners, suppliers, and even labor. Investors should also keep an eye on how this potential deal interacts with the existing Department of Energy loan. Reports suggest that some of the negotiations involve modifying conditions precedent for the first draw of the loan. If those conditions are loosened or clarified in the context of a government equity stake, it could accelerate the construction timeline. For the stock, that means less uncertainty around delays and more visibility into first production. Of course, there is also a political angle. The Trump administration appears to be leaning into a strategy of securing critical mineral supply domestically, echoing moves we've seen in rare earths and semiconductors. If LAC becomes a flagship example of that policy, it could draw even more attention, both positive and negative. Supporters will view it as forward-looking industrial policy. Critics may raise concerns about government intervention in markets. But for shareholders, what matters most is that government involvement typically lowers financing costs, accelerates permitting, and boosts confidence that the project will ultimately reach production. So where does that leave us after this blockbuster session? On the one hand, LAC has just experienced a parabolic move on the back of a rumor that is credible but not confirmed. Stocks that make such moves can retrace quickly if news flow dries up. On the other hand, the scale of the volume, the caliber of the reporting, and the alignment with US policy make this more than just a passing headline. The risk-reward balance has shifted in favor of the bulls. For investors thinking about the next steps, the key will be monitoring official communication. Watch for SEC filings, press releases, or statements from the Department of Energy or the company. Pay attention to General Motors, which will likely have a say in any equity structure. Track lithium prices, because the economics still depend on the commodity. And finally, watch the technical action over the next few sessions. Whether the stock can consolidate above $6 or whether it retraces toward 4 or 5 will tell us a lot about how much staying power Wednesday's rally really has. In conclusion, Lithium Americas has moved from being a speculative bet on a high-risk, high-reward project to being at the center of US industrial strategy. The potential for a government equity stake, layered on top of the already secured Department of Energy loan, transforms the outlook. There are still risks, execution, commodity pricing, and the uncertainty of negotiations, but the possibility of Washington stepping in as an owner rather than just a lender creates a foundation for optimism that few other lithium juniors can match. That is why the stock exploded today, and that is why it may continue to command attention in the weeks and months ahead.